Well, hello, everyone. It's the 12th of September. Joe with you here on a Monday, and it's a pretty slow Monday. I do think the markets are going to be waiting for some inflationary numbers coming tomorrow and later on this week. But since it's Monday, let's see what we got. I'm going to give you my 2 cents on the markets, take responsibility for the outcome. You guys understand how this works. Let's get into a very uniform market analysis, which is just basically a carryover from last week. The exact oversold bounce that we're seeing. I'll draw some lines at some key levels here, but you can see the Dow, the S&P, the NASDAQ all up about 1% each. NASDAQ a little over, Dow just slightly less. But this was also participated in with energy and precious metal. So everything has been going up, and it has been, since mid-week last week, Wednesday, Thursday, right into Friday, and then here we are on Monday. So it's been a pretty good oversold bounce, and it is at some key levels, but it's at a very interesting key level because we really can't do much with this. Let's go into our daily news here. The market continued their bounce from last week. That's it. Nothing's changed. You can see the volumes pretty much flat. We'll get to the chart in 1 second. The CPI data should have an impact on tomorrow's markets. That's kind of where everybody's looking towards. We've seen the reaction to it. The markets are anticipating or excited to see some sort of slowdown when it comes to the expansion of the economy, thinking that will be the end of it and the Fed will stop being as aggressive. Folks, that's false. It's going to take more than one good number for the Fed to take their foot off the gas. And the sooner we understand that, the better it's going to be. There's a lot more indications than just the CPI. I've got a bunch listed. We've got the PPI manufacturing, we got retail sales, but it's going to have to be consistently lower numbers, not just one. Okay, that's done. We're fine. The Fed's going to step away. We've done our job. That's not how this works. And I do believe the markets react as such. There's my opinion. Let's get back to what we have. Advanced decline line. We're still seeing more advancers than decliners. Of course, that should be going north due to the fact that this is our fourth day up in a row. But below the moving average is skewed to the one side, but it's not jumping out at anybody. This still is an oversold bounce, and that's kind of where we have to go with this, at least for now. So let's get into the charts, folks, because what you're going to see is we are back above, well, I called it a pretty big level. The 410, I thought, was a big level on the SPY, and it's back there. Now, it's not quite above it. It's kind of bumping its head on there. Right now, it's this oversold perfect comeback. Kiss the falling 20-day moving average and roll back over, which absolutely can happen. I'm just saying it's going to. I'm just saying I've seen it happen many times. So we do have an area up here at the 420 mark that we could see a little bit of a spill back. Now, if it does that and starts to bounce between this 410, 420, then we've got something a little bit more substantial. And that might come with some optimistic numbers in the economics. And yes, folks, I'm going to say it again. I do think they're super early. We need to see maybe not 4 or 5, but at least 3 or 4 consecutive slowing inflationary numbers before the Fed will say, okay, instead of raising 50 or 75, we're going to cut it down a little bit. Till then, guys, this is just, I think it's a little bit optimistic, and I have to treat this as a bear rally. So, going to the Qs, and what's tough about it, too, I want to treat it as a bear rally, guys, but it's I don't want to be preemptively selling short. Okay, so I am definitely sitting on my hands. I am not buying anything bullish, which is funny because I've got 2 bull examples for you guys that like them. This is just a beautiful bear rally. Corey made mention of this last week, and I kind of said something about it Wednesday, and it looks like that's what we're getting. But it's too early to tell. It's just Monday. Here's the Qs. Exact same situation. Back up to the 310 mark, but it could do that same deal. Let me see if I can't grab my little chicken scratch pin here. Hit that 310 between the 320 and bounce around. Play this game. That's if we do get a pretty optimistic number and an optimistic market. I'm not sure where it goes from there without staying above the 310, or if it hits the 320 and then rolls and starts to break back down. I would not be surprised. Boy, I don't want to be too pessimistic, but I would not be surprised to see another round of selling, at least before month's end. All right, so Let's get to the heat map. And the heat map is showing us exactly what's going on over the last week. Everything's nice and green. Everything's participating. Energy, all the way to real estate, your technology, communication services, everything's participating. That's another good inclination of an oversold bounce. It's very easy for me to keep these at zero because I'm not seeing any sort of indication. I'm not seeing any previous highs broken. I'm not seeing we're still in that downtrend for all I'm concerned. If we roll over at 410, we've confirmed another lower high. So I'm sitting back. None of my indicators tell me to pull a trigger. And guess what I'm not going to do? Pull triggers. With all that fun being said, I've got nothing on the sideways side. There are sideways trades. I just didn't like anything. And the reason being is we have an aggressive move to the upside that could push some of those channeling stocks out of their range. They could come right back. So I've put them on hold for now. On the bear side, everything's bouncing. Everything's bouncing. I've got a bunch of bears we've looked at, folks. We've got lists. You guys can go back through our previous classes and get handfuls and handfuls of examples. Now, on the bull side, we did have a couple. Interesting enough, guess what they're in? The first one, energy. This is CTRA. This came up on the Wednesday's class, and it's actually showing some signs above its 20-day moving average. It's nothing that I really want to race out and buy, but technically, let me get my pen because it is above. There we go. Resistance, a previous resistance. Let's do this. This draws a straighter line, right? So it is above a previous swing high from a higher low. Let me try this one more time. I tried to select the pin, guys, but it's not giving it to me. There it is. Okay, so we do have a trend. Now, you can make the argument, hey, it is above this $30 mark, and it's moving higher, and we got a target, clear as day up here at about 31.75. Or you could wait for it to get here and see if these markets are going to continue higher and play a breakout above the 32 mark. That might be a little bit safer. I know that Rob and Darren both echoed this on Sunday's class, that you've just got to be cautious. There's no reason to force trades here. We're not getting any clear indications. So that would be the cautious plays. Wait for this to get above that 32. Here's the other one. This is Southern Company. This has been on our bull watch on and off for a while, and it's always been a pretty good producer. It's back up to that resistance at 80. You guys can see it right up there. Now, this is more of a channeling stock because it had come from kind of a consolidation area here, the beginning of August, and then a little bit of a dip down the end of August into the beginning of September. So I'm going to call it a channel between 78 and 80, but it is up against that 80 or 80. Let's call it 81. It is up against that 81 mark, so it could be a nice little break to the upside. However, I am not really going to follow these. I'm not really interested in pushing the buy button at all tomorrow. But just a couple of things to look at because I like to give some trades. So the CPI should carry a reaction, probably an unwarranted one. It seems to be something that everybody watches for the last little bit, and it seems to be this big know-all, be-all. Hey, if the consumer price starts to come down, that means we've curbed inflation. Let's go buy the markets. Not true. We use an analogy here of when you're trying to turn an oil tanker in the ocean, it takes a long time to turn it. The markets think it turns like a speedboat. So they see that first, oh, this is slowing down. Boom, let's buy because inflation's curbed. No. This takes a long time. It's going to take 2 or 3 or 4 CPI numbers showing consistent drops before I think that Fed really takes their foot off the gas. However, it's going to get a reaction tomorrow. And so be leery of what that reaction is. I don't think there's going to be much behind it. I don't know if it's good or bad, but it'll probably react. That second bullet point I pretty much just read to you. The CPI is tomorrow, Thursday. We've got PPI retail sales, Empire State. Sorry, folks, State, S-T-A-T-E. Little misprint there. Manufacturing index, stuff like that. So there is plenty of economic news coming for the rest of the week, and I do believe a lot of traders will be kind of sitting there watching it as these markets continue to bounce. And I don't think that bounce stops. I think it'll subside now that's a resistance. But for people that are anticipating good news, they're not going to jump out yet. They just purchased. They've been purchasing since middle of last week. Check your potential trades for earnings reports. We're out of it. This is the slow September month. Not a lot going on. Little bit of optimism in the markets over the last few days, and we'll see what happens with the CPI number tomorrow. All right, guys. Thanks so much for joining me, and we'll talk to you next time. Bye, everyone.